What's happening, crypto fam? The market is absolutely electric, and you are locked into the Bitcoin Bulletin, your essential source for the news that moves the needle. We're diving headfirst into a week of seismic shifts and groundbreaking developments. Get ready, because the pace is furious, the stakes are higher than ever, and you won't want to miss a single second of this. We've got major players making power moves, innovative tech breaking new ground, and market forces aligning in ways we haven't seen before. This is where you get the inside track, the unfiltered truth, and the insights that matter most. So buckle up, stay sharp, and let's break down what's really going on in the world of crypto right now. We're talking about a stablecoin revolution hitting the most fundamental layer of digital finance. We've got a massive surge that's got everyone talking about the future of big money in crypto, and a strategic shuffle in the ETF world that could redefine investment landscapes. Plus, we've got a deep dive into how institutional players are reshaping the game. It's all here, and it's all happening fast. Don't go anywhere, this is the Bitcoin Bulletin. A native stablecoin emerges on Bitcoin's foundation. This development signals a significant shift, potentially unlocking new utility and efficiency for the world's leading cryptocurrency. Get ready for a game-changer in digital currency as Tether, the titan of stablecoins, announces a monumental leap: the launch of its USD stablecoin directly onto the Bitcoin blockchain. This isn't just another token on a sidechain. We're talking about a truly native integration leveraging the innovative RGB protocol. For years, the dream has been to bring the stability and utility of stablecoins to Bitcoin's robust and decentralized network without compromising its core principles. Now, with the recent mainnet release of RGB v0.11.1, that dream is rapidly becoming a reality. The RGB protocol, a sophisticated client-side validation system, allows for the issuance and transfer of digital assets anchored to Bitcoin, but crucially, it keeps the bulk of the transaction data off-chain. This means significantly less congestion on the Bitcoin base layer and a dramatic boost in privacy for users. Imagine conducting stablecoin transactions that are almost instantaneous, with minimal data footprint and with a level of privacy comparable to Bitcoin itself. USD transactions on RGB will occur off-chain between user wallets, with only periodic anchors to the Bitcoin blockchain to ensure finality. This architecture promises to dramatically reduce transaction costs compared to traditional on-chain methods, though users will need to manage backups of both their Bitcoin keys and the RGB proofs. Tether's CEO, Paulo Ardoino, expressed excitement, stating, "Bitcoin deserves a stablecoin that feels truly native, lightweight, private, and scalable." With RGB, USD gains a powerful new pathway on Bitcoin. The implications are vast. Billions of users could soon make and receive stablecoin payments on Bitcoin, even with offline capabilities, enjoying full user control and a reduced on-chain footprint. This move positions Bitcoin not just as a store of value, but as a functional, decentralized payment system capable of supporting a wide array of digital assets and contracts. The success of this integration hinges on wider adoption of the RGB20 standard by developers, wallet providers, and exchanges, potentially ushering in an era where Bitcoin serves as the ultimate global settlement layer for both BTC and stable assets. This integration could fundamentally alter how stablecoins interact with major blockchains, but will the ecosystem be ready for this leap in client-side validation complexity? Next, we're diving into a market surge that's pushing Bitcoin's price to stratospheric heights, and it's sparking a massive conversation about institutional adoption. Bitcoin's meteoric rise ignites institutional gold rush. This unprecedented price action is drawing major financial players into the crypto space, signaling a potential paradigm shift. Prepare for a seismic event in the financial world as Bitcoin experiences a breathtaking surge, rocketing past the $113,000 mark and triggering a wave of institutional adoption that could redefine the future of finance. This monumental climb isn't just about price. It's a powerful testament to Bitcoin's growing legitimacy as a global store of value and a serious investment asset. For years, institutions have been cautiously dipping their toes into the crypto waters, but this sustained upward momentum has thrown the doors wide open, inviting massive capital inflows from hedge funds, asset managers, and even traditional banks. The narrative is shifting from Bitcoin as a speculative fringe asset to a core component of diversified investment portfolios. Analysts point to a confluence of factors driving this surge: increasing macroeconomic uncertainty, a growing acceptance of digital assets by regulators, and the undeniable network effects of Bitcoin itself. As more institutions allocate significant capital, they bring not only liquidity, but also a demand for robust infrastructure, compliance solutions, and sophisticated trading tools. This, in turn, is spurring innovation across the entire crypto ecosystem, from custody solutions to derivatives markets. The $113,000 milestone is more than just a number. It represents a psychological victory, validating the long-term thesis for Bitcoin and encouraging even greater participation from the institutional sector. This influx of institutional capital is also expected to drive further price appreciation as these players continue to accumulate, potentially creating a virtuous cycle of growth and adoption. The long-term implications are profound, suggesting a future where Bitcoin plays a central role in global financial markets, acting as a digital gold standard in an increasingly digital world. The sustained demand from these large players is not just influencing price, but also shaping the development and regulatory landscape of the entire cryptocurrency industry, paving the way for broader acceptance and integration into mainstream finance. This massive influx of institutional money is creating ripples across the entire digital asset space. But what does it mean for the average investor? Stay tuned as we uncover a significant shift in the world of crypto ETFs, revealing where the big money is moving next. Tether's bold move: USD goes native on Bitcoin via RGB. This integration promises to bring unprecedented privacy and efficiency to stablecoin transactions on the world's most secure blockchain. In a move set to electrify the stablecoin landscape, Tether, the issuer of the world's largest stablecoin, USD, has officially announced its strategic integration with the RGB protocol to launch USD natively on the Bitcoin blockchain. This landmark development, detailed in Tether's latest announcements, signifies a monumental leap forward, enabling secure, swift, and remarkably private stablecoin payments directly on Bitcoin. The RGB protocol, a cutting-edge client-side validation system, recently activated its v0 11.1 mainnet release, unlocking the potential for issuing digital assets on Bitcoin with a minimized on-chain footprint and enhanced privacy features. This means USD will no longer be a wrapped asset or confined to secondary chains. It will exist as a truly native asset on Bitcoin itself. This paradigm shift empowers billions of users globally to conduct stablecoin transactions on Bitcoin, offering offline capabilities, drastically reduced data requirements, and complete user control over their assets. Paolo Ardoino, CEO of Tether, articulated the vision. Bitcoin deserves a stablecoin that feels truly native, lightweight, private, and scalable. With RGB, USD gains a powerful new pathway on Bitcoin. RGB's architecture, built atop Bitcoin and compatible with the Lightning Network, utilizes zero-knowledge cryptography and client-side validation. This approach bypasses the need for new base layer consensus changes or opcodes, making it a highly efficient and private method for asset management. Key features of RGB include its ability to manage asset ownership and state off-chain, anchored only by commitments on the Bitcoin layer, ensuring both scalability and privacy. Users can securely store both USD and BTC in the same wallet, opening up new avenues for everyday purchases and cross-border remittances, particularly in developing regions with limited access to traditional financial services. This makes Bitcoin a potent, decentralized payment system capable of supporting stablecoins and complex digital contracts, moving beyond its role as merely a store of value. Unlike Ethereum-based stablecoins, which grapple with concerns over smart contract vulnerabilities and high gas fees, USD on RGB offers a more sovereign, secure, and cost-effective alternative. Tether's substantial backing, with over $86 billion USD in circulation, is poised to be a critical catalyst for RGB adoption. The company is actively encouraging developers, wallet providers, and exchanges to embrace the RGB 20 fungible asset token standard. This integration extends beyond Bitcoin, challenging existing stablecoin models on platforms like Ethereum, Solana, and Tron, which often have more centralized or regulated architectures. By bringing native stablecoins to Bitcoin, Tether aims to reclaim Bitcoin's position in everyday payments, facilitating retail transactions, cross-border remittances, and micropayments with unparalleled efficiency and privacy. As more wallets integrate RGB and support USD, Bitcoin is on track to become the most trusted global settlement layer, not just for Bitcoin itself, but for a wide spectrum of stable digital assets. The potential for seamless, private transactions on Bitcoin is immense, but what are the real-world implications for everyday users and businesses? Now, let's shift gears to a different kind of market movement, a massive surge that's drawing institutional giants into the crypto arena. Institutional capital reallocates. $18.3 billion flows from Bitcoin to Ethereum ETFs. This significant shift in investor sentiment highlights a growing institutional appetite for Ethereum's expanding ecosystem and potential applications. In a stunning display of evolving institutional strategy, the cryptocurrency ETF market has witnessed a dramatic reallocation of capital, with an estimated $18.3 billion flowing out of Bitcoin-focused ETFs and directly into Ethereum-based ETFs. This substantial movement signals a pivotal moment, indicating a growing conviction among major financial players regarding Ethereum's long-term potential and its burgeoning ecosystem. For months, Bitcoin ETFs have dominated headlines and seen unprecedented inflows as institutions sought exposure to the flagship cryptocurrency. However, recent market dynamics and a renewed focus on Ethereum's utility beyond just a store of value appear to be driving this significant capital shift. Analysts suggest several key factors are at play. Firstly, the recent approval and launch of spot Ethereum ETFs in the United States have provided a regulated and accessible avenue for institutional investors to gain exposure to ETH. This regulatory clarity, coupled with Ethereum's extensive developer community and its role as the foundational layer for a vast array of decentralized applications, dApps, including DeFi, NFTs, and the growing metaverse, is proving highly attractive. Unlike Bitcoin, which is primarily viewed as a digital store of value, Ethereum is increasingly seen as a programmable asset and a platform for innovation. The potential for staking yields, its role in facilitating complex smart contracts, and the upcoming upgrades aimed at enhancing scalability and reducing transaction fees are all contributing to its appeal. This reallocation isn't necessarily a repudiation of Bitcoin, but rather a strategic diversification by institutions looking to capture the growth potential across different segments of the digital asset market. As more capital flows into Ethereum ETFs, it is likely to spur further development and adoption of the Ethereum network, potentially leading to increased demand for ETH and further price appreciation. This trend underscores a maturing crypto market where investors are becoming more sophisticated, seeking exposure not just to the largest digital asset by market cap, but also to the platforms enabling the next wave of digital innovation. This major shift has sparked debate about the future dominance of different cryptocurrencies in institutional portfolios. But what does it mean for retail investors? Finally, we're bringing you the latest on how Tether's new native stablecoin on Bitcoin via RGB is set to revolutionize payments. And that's a wrap on another explosive episode of Bitcoin Bulletin. We saw Tether launch its native USD on Bitcoin via RGB, paving the way for private, efficient stablecoin transactions. Bitcoin's surge past $113,000 is attracting massive institutional investment, signaling a new era for digital assets. Meanwhile, a staggering $18.3 billion has shifted from Bitcoin to Ethereum ETFs, highlighting institutional confidence in Ethereum's ecosystem. Don't miss out on any of the action. Smash that like button, subscribe to the channel, ring the notification bell so you never miss an update, and let us know your thoughts in the comments below. Follow us on all social platforms for real-time insights. We'll see you next time.